Hello once again, I'm Kevin Turner from Real Estate Talk, and on behalf of Australian Property Investor, welcome to this special podcast. In the latest edition of API, Angie Zigomanis, who is the Senior Manager of Residential Property for property market research and analysis company BIS Shrapnel, answers the big question: how will law and regulation changes reshape how investors look between now and 2035? Well, no doubt we're going to look a little bit older, aren't we, Angie?
Definitely a few more grey hairs, or a bit less hair, I guess, as well.
Well, actually, in my case, I don't think I could lose much more, but you look pretty comfortable. Angie, what are some of the main differences likely for investors today and through until 2035?
Well, look, I think in some sense the investment market will still be dominated by individual investors as it is now, but there will be changes as well. We are seeing, or we expect to see perhaps regulations and laws change to try and get more institutional investment and company investment into the rental market, and to try and create more affordable housing. Affordability will really be a key issue in the future, just as it is now, but it'll be becoming increasingly more important, particularly from a political point of view. So we expect to see more institutional investment. We expect to see more long-term rental, rather than some of the more transient rental we're seeing now. So people will be renting for 3, 4, 5, even 10 years, and that'll change some of the nature of ownership of rental dwellings as well. Within some of the inner suburbs, what we perhaps expect is, in a lot of the cities now in the inner suburbs, we've seen the older rental dwellings, the student digs, those sorts of properties. But as with the increased desirability of those inner suburbs, a lot of those rental properties, when they do come onto the market, we're finding that they're increasingly being picked up by owner-occupiers, renovated and upgraded. And that'll continue to be a trend out to 2035.
Been a lot of pressure on tax concessions and so on, namely, negative gearing. Do you think that's going to continue into the future?
Oh, I think it'll be there in some form, but I guess at the end of the day, even now, you're seeing the federal government really wants to, over the next number of decades, the revenue environment will shift. We've got an ageing population. The government will be seeking to find further ways to generate revenue or reduce concessions, which is the reverse of generating revenue. And negative gearing is probably going to be a big part of that. It will change in some form, I suspect, but it's hard to say how it will change. Politics will always be an overriding factor, I guess.
Yeah, I guess, yeah. What about, you talk about renters there, but what about generational renters? Do you think that renters are going to be more long-term? You're looking for long-term rental, even looking at renting for the rest of their lives as opposed to actually owning a property?
Yeah, look, I think it'll be increasingly the case. And one of the things perhaps we have started to see now is also people choosing to rent where they want to live, but buying where they can afford as well. And they'll use the rental income from where they buy to subsidise the location where they're living. As I said, affordability will play a part in this. Said people may not be able to afford the houses in those areas, but they will be able to afford to rent in those areas. So there will be people perhaps who will rent for quite some time for lifestyle purposes and where they want to live, and perhaps maybe when they get into the 30s or maybe in the 40s, lifestyle situation may suggest that they own, but they will be renting for quite some time.
It's an interesting point you make there, and I wonder if that would actually lead to two different types of investors. That would be the investor, those people who are going to rent and then have an investment property somewhere else are obviously going to do that for aspirational reasons. So maybe the property they're renting, obviously someone's going to have to own that. Will that be a different tier of investor?
To some extent, I think it will be. It's a lot of us suspect the middle to outer suburban properties may well be picked up by, may well be aimed for more affordable rental, and may be owned by people who, I guess, want to, or by people such as corporations, etc., or institutional investors who are happy to have a long-term renter in there and not have to deal with the changeover in rental and the increased management that's involved with it.
Yeah.
Within inner suburbs, I suspect the investor might be a bit more, because the yields are lower and may not necessarily be as attractive for an institutional investor. It may be more of the individual investor who's really focusing on the capital growth that will come through.
Interesting, isn't it? We talk about the great Australian dream, owning your own property, and I sometimes wonder if we're headed the way of the European market. In other words, we'll become long-term renters. Do you see the Australian property market looking that way in the future?
Uh, Perhaps, but I still suspect not to the European level. I guess from a cultural perspective, as you said, Australians still want to own their own home for aspirational reasons, and I think most people who at this stage, once they have children, they still aspire to that backyard and the quarter-acre block. The backyard's not necessarily as big as it used to be, but I suspect there's still some level of outdoor space that people would still prefer.
Well, is there a limit to what investors will pay for blue chip property, Angie?
Well, to some extent, the answer is no, I guess. I guess you think of it this way. If you look at Melbourne today compared to Melbourne in 2035, I just did a quick look before this interview, look at the ABS population projection. So Melbourne will have 43% more population in 2035 compared to now. Now, if you say, for example, a 5-kilometre radius of the CBD, which contains perhaps, say, 10% of Melbourne's dwellings at the moment. Once you look at Melbourne's expanded population and all the dwellings required, that 5-kilometre radius, instead of comprising 10% of the dwellings, will comprise about 7% of the dwellings. So whereas that 10% of dwellings is catering to the top 10% of earners, now it's catering to the top 7% of earners. So you will be needing a higher income to afford those inner city most desirable properties. So you will see prices in those most desirable areas grow up over and above average income levels.
Angie, great talking to you. Thank you very much for your contribution today.
No problem at all. Thanks, Kevin.